Hello, ladies and gentlemen. Here we go. Another live show with Rob. Thursday. The Tuesday live show was good. It was great. All those of you that were here. Today, we are once again going to have to go over that issue of the difference between system and strategy, because I see that is still an issue. Guys, don't forget, most traders lose money. If you don't like losing money, probably shouldn't be trading. Read the risk disclaimer. So we're going to go over a question today. Somebody posted a question, so we're going to have a look at that as well. Last week's winner was Sepo. He got his prize. So we'll have another draw today, somewhere about an hour into the show or something like that, on the comments on the video. I'll show you which video we're drawing on today. And hi, Sabria and Elaine. Welcome. Good to see you guys. So I'm going to get going, and we're going to have a look at how things are and how things are doing in the market and what's been going on, and then we'll wait for everybody to get on board. There are a few people here, and we can see what happens. Why is my system showing no data? Hopefully it's working. We shall see. Warning. All right. Okay. Good connection. Okay, there we go. Bit worried about connection there. It was doing a little bit of a hop, skip, and a jump. I don't know if it's the internet or if it's the weather or what. It's winter here in Cape Town. We don't have autumn. We just have like summer and then winter. But yeah, but winter for us is not really that cold. It's not that bad. We live in an amazing environment. Okay, so where were we? Let me make sure I didn't leave any risk disclaimers or anything on the front page here that's going to be in the way. And I don't notice again. So the S&P 500, the US 500 is still going to the upside, still moving. My concern for it is it has broken through the support now, I think. It's broken through this trend support, and it looks like it wants to head down. The reason I'm still in the trade, and I mean, I'm still in the trade in a couple of positions in a couple of different places, not just here. The reason I've held it, I've put a trailing stop on it, because there's not much profit in it at the moment, $100 some. I'm just, if it takes a trailing stop out, we still make like 60 or something like that. But there's a level here. There's what was a resistance level that has now become a support. So it broke through that resistance level, it's become a support, and it's come back. Now this could be a bit of a retest. Now if the test fails and it breaks through, then it breaks through. Then it's kind of correcting. But if it doesn't fail and it holds this level, then it's going to continue going up to the upside. And that's why I haven't dumped this trade yet, and I'm kind of holding on to the trade because of that level, which is sitting right in there. That's quite an important level to keep in mind. I actually don't think I have drawn a line in there. I probably should, but the price is in there at the moment, so it's fine. And the price is actually showing you very nicely that that level is there. What I'm looking at is just to see, will it break below that level? Will it close a red candle below that level? Or will it, hi Amelia, hi Bruman, good to see you again. Or will it actually bounce up? Let's just see what it does at this level before we jump to conclusions and jump out of the trade in panic and say, oh, it's going down now, it's broken the trend support. So that's the main reason I'm still holding this trade on all platforms, is because it hasn't broken this level. And when it breaks that level, then I'll be convinced that I'm wrong. That's my trailing stop has moved up. It's in profit. I'm not too worried about it. It's a big deal. And it has not enough profit to be jumping out anyway. The Brent crude oil, on the other hand, is a bit more of a worry, because this one was doing really well. And it jumped all the way up to the 70 level. And now we've got 4 big red candles coming down. So I am a bit concerned that it's going to come all the way back down. And I don't like that idea. Let's just see what happens with that, if it works out or not. But yeah, I would say that if I look at this, there is some space here above my trailing stop where it could hit it. But I mean, to go from $400 in profit down to, well, it's at 327 now, but it could go all the way down to next to nothing. So But you gotta play the trades, you know what I mean? I'm looking for the big win. I don't like the 4 big red candles. They do concern me that it's coming back this way. But there is a good chance it'll turn around and carry on going back up again. This morning's trade of the day, we call the Aussie dollar, Canadian dollar, long. And there she goes. She's going long. That one looks fine. Hey, Chapo, good to see you again. Hi, Tim and Harold. Hi there. Good to see you. Good. I've actually got your question. Actually, I'm going to answer your question here on the live show today. We're going to go through it. We're just going to go and have a look at it because it's a lot to do with the risk and how you work the risk. So we're going to go through that. What I normally do is just wait for everyone just to get on board, and then we can start going through those particular scenarios. So this is a nice little trade. I'll actually explain the risk to reward on this trade shortly, so that you can get the answer to that question as well. Don't forget, today is the live draw, about an hour in the giveaway, and somebody else will, of course, win the 2-step 10K challenge, and Shepo won that last time. Okay, so that's great. Just for a bit of fun, so that you guys can have a bit of fun, so that you guys can have a small funded account. For those of you who don't have one, for those of you who want one, extra one, whatever the case, do whatever you want with it, have a bit of fun with it, and practice your trading. A good place to practice your trading. Especially for those of you that are putting up your hard-earned cash. It's always good to get a bit of practice in. This is gold. And like I said this morning on the members video, I'm very sort of 50-50 on the gold at the moment, because it's going into this triangle, and it's got to break out to either side for it to give us a good result. So it's not breaking out of the trend resistance, and it's not breaking through the trend support. I'm kind of looking at this as, let's see which way it goes, and then we'll take it from there. But it is in a range at the moment. It's sitting in a range. And I got the strangest comment this week, because I don't know if you guys remember, in one of my videos I said the markets can only go 2 ways. I think I even said it in the live shows a couple of times. The markets can only go 2 ways, up or down. You can either buy or sell. And somebody said to me, but the markets go sideways as well. And I think I explained to you guys that whether the market's going sideways or not, it still goes up or down, and you still buy or sell. It doesn't go sideways. Yes, but it goes sideways. Have you guys ever seen a horizontal candle, ever? I don't think so. I don't think one of you guys can show me a horizontal candle. Not one of you. Nobody in the world can show me a horizontal candle in the market. So the understanding of the system has got to be this. We trade 3 ways. We trade with the trend, we counter trade the trend if it breaks out, for example, and we trade in a range. So it just came to mind because I'm looking at this gold that's in a range. So what is gold doing? It's in a range, and you can trade it in that range better than most other trades, because it goes up, it goes down, it goes up, it goes down, it goes up, it goes down. You're buying and you're selling within that range. Okay. So you might say that gold is trading sideways, but you can trade it at the bottom of it sideways and at the top of it sideways, and that's actually quite a lot of points and quite a lot of distance, depending on the time frame that you might be trading it on. I found that to be quite a funny comment, because like I say, I've never seen a horizontal candle ever where you buy it at 0 and it stays at 0, or you buy it at 100 and it stays at 100. Things go up and down. Even if it's small amounts, they go up and down. Okay, that's it. End of story. They don't go sideways. Euro Great British Pound is going up, as we said it would. I did call this a couple of days ago that we're going long on Euro Great British Pound, and Euro Great British Pound has gone up. I don't have it on this account for you guys, but I can't bring all the accounts into the live show. So this one was this account was built for you guys to play with and to enjoy and do it together with us on the live show. So that's what it's mainly for. But there you go. Euro Great British Pound is going up. You'll see I called it in a members video 1 or 2 days ago. Australian dollar, US dollar, also called long. I think even this morning it's bouncing up out of this level here. Bitcoin. And that's Brewman's baby. Brewman, I think we're going short again. It's broken through this trend here, and it looks like it wants to go down. It is at a level at the moment. It is at a level, I think it's around about this 106, 105 level. But the next level is 100, 101. I think we're trading in a range at the moment, sort of between 100, 110. So 101, 111. People like round numbers, 100, 110. It's trading in that range at the moment. It's the old sideways trade. So you can actually, buy it at 100 and sell it at 110 sort of thing. I don't know how long it's going to be in that range or if it's going to break to the upside or what, but yeah, for the time being, it seems to have found a level that it likes. So yeah, keep an eye on that. CHF JPY. What's that? Swiss franc, Japanese yen. Looks like it's going long. Looks like it's broken out of its range. Sometimes these things break out of their range. You see it sits in the range, goes up, goes down, goes up, goes down, goes up, goes down, goes up, breaks through. And then you get the break and retest. Remember, I gave you the video break and retest. Is that the last video that I did? Break and retest. I'm not sure. But yeah, break and retest strategy. I think it is in the last video where I show you guys how that works. So it breaks out, comes back, retests, and then goes. For those of you who want to wait for break and retests, you can. I don't often wait for them because I found with my experience that they don't always retest. Sometimes they just off they go. And so I suffer from FOMO. I like to take it when the green candle closes, looks like it's going, I'll take it. If it comes back to retest, no worries, I'll make sure my stop loss is below that and it'll go. That's fine. That's one of the reasons I keep my stop losses out of the way. So yeah, I'm hoping the US 500 does hold at this level and turn around, because that'll be good on a number of my trades. So let's have a look at your question. Brewman short, beat me to it. There you go. But then again, you do Brewman trade crypto, so I very seldom look at it. Okay, no problem. I'm going to answer your question now. Just come back to this point in the video and come and have a look, and I'm going to answer that question now so that it is replied to. Go and do the meeting. That's all fine. You can always come back and watch the replay. That's always great. But the question is, thanks for the words of wisdom. I'm curious regarding the 1% risk, what kind of these scenarios would be. You have 10,000, but the position size on the trade is 100. You let that 100 get liquidated whenever it happens. Isolated margin. You have 10,000, but the position size on the trade is 100, but you put a stop loss where you would lose that 100 cross margin. You have a 10,000 position size, is 10,000 on the trade, but you put a stop loss. So if the price goes against you by 1%, you are out, cross margin tight. Stop loss, edit, scenario 3 is unlikely. Just watched another video where you said the trading needs to have room, so no tight stop losses. Okay, so what I'm going to do, I'm going to go through the scenario of stop loss so that you get the idea of what my stop loss strategy is all about. And it helps everyone to understand that there isn't 100 different scenarios with regards to stop loss. So let's say we're looking at this Australian dollar, Canadian dollar trade. This is your trade and you want to go long on this particular trade. So we're thinking we want a long trade here, but we want to have a stop loss. Our stop loss is 1% of our account. Our account is a $25,000 account. So 1% of a $25,000 account is how much, guys? It's $250. Now, the most important trick here is to understand that if you have a $25,000 account, if you had a $100,000 account, if you have $1 million account, don't change the size of your account with profit or loss. The size of your account is determined by the size of your account that you start with. So if your account is $25,000, that is it. Withdraw your profits Put them wherever you want to, in investments, in the bank, whatever the case. Don't leave them in a trading account. So now the size of your account is that size. The reason you make the account that size is for cover, to cover the leverage. Now, the reason you take a percentage of that account is so that you don't blow the account because you're trading with leverage trading. You must remember that if the stock happens to move by 10%, it'll probably take out all of your leverage if you're fully leveraged. I don't know how to explain that nicely, but I'll try and find a way. So the reason I take a 1% risk on every single trade, you can take any percentage you want that works out mathematically for you. But my reasoning is, if I risk 1% on every trade, on, let's say, a $25,000 account, my total risk over 10 trades is 10% of the account, which is $2,500. Easily recoverable. You haven't lost, you haven't blown the whole account. It just makes it that much simpler, that much easier. But it depends how much you want to win. Some people might want to risk 5%. Some people might want to risk 10% per trade. Just remember, if you risk 10% per trade and you lose 10 trades, you're going to lose the entire account. That's just the way I look at it. So I can take 10 trades and have a total risk of 10% on the account. The important thing is, though, whatever risk you decide on, you need to keep it the same on every single trade. Every single trade needs to be exactly the same, no matter how confident you feel about whichever particular trade you want to take. Now, the point of it is to look at this and say, I want to take a long trade here. At what point on this trade would I determine that this trade is no longer valid to me? If I looked at this trade, if I said, I'm taking this trade with a view to going long, but at what point would I say this trade's no longer valid? I'd say probably down here at the 88,250, maybe the 88,000, just to be safe. Then if my trade gets to that level, it's worthless. I'm not even going to hold that trade anymore. It's invalid. This prevents you from moving your stop loss. And it also prevents you from dollar cost averaging. Because why? Why on earth would you dollar cost average if you're at a point of invalidation? And why on earth would you move your stop loss at a point of invalidation? You wouldn't. It's you don't want to be in the trade. So now you've decided that you want to take this trade as a buy. So you got it down as a buy. And the first thing you got to do is say, well, my stop loss is at 88. Okay, I'm just going to put it at 88. 0.00000000000. And then I don't want to lose $300. I want to lose $250. So I'm going to make that 0.4. And there you go, 254. As near as you can. It doesn't have to be precise. And how's it going? So you got to sort of plus minus around that area. That's where you want. So now you know the size of your trade, 0.4 lots. If you put your stop loss there. While you're here, make sure the risk to reward is worth your while. Where do you think you're going to get reward on this trade? In all likelihood, at about this 89.4 or maybe the 85,000, 89.6. But I would say, let's see what it's like at 89.4. Is it worth taking this trade? Is it worth it? Nope, it's not. There's no risk to reward. There's no risk to reward on this trade. If you put this at 88,000 and you put this at 89.4, you are literally not making a decent profit. So it's not worth taking the trade. For this to be a worthwhile trade, the profit level would have to be at about 90. 999. And then that's up here somewhere. Can it reach that? In all likelihood, it can. It could even reach 90,200 if you want that. And that would give you a $400 profit on risk to reward. Then you can take this trade based on that risk to reward. If you feel the trade can reach that level, the trade's got to be able to reach that level for it to be a worthwhile trade. You've got to feel confident that it's going to reach that level for it to be a worthwhile trade. If I look at 89.4, 89.6, the risk to reward is negative, and you do not take a trade on a negative risk to reward because you want to make more on your wins and lose less on your losses. I'm not going to take the trade on this platform because I've got it on other platforms and then I've got it in too many places. But okay, that's fine. But that's how you work the risk to reward. So what you're looking for, first you look for the invalidation area. First, you look for the invalidation area. Where's my area invalid? 88,000. You work out $250 loss, your 1% loss. You work out your 1% loss based on that, back to the cost. And then you work out if you've got a good risk to reward to take profit. And you can put that in and you can place your order and you'll have more on your win and lose less on your loss. That's how you take it. If you work it on 2%, same thing. This would be $500. It would just be a different amount. If it was a 2%, you'd be looking at a 0.8 lot, which would put that on $500, and it'd give you a $794 profit if you're working on 2%. It's entirely up to you what percentage you want to work on your account. Just remember, the higher the percentage, the quicker you can mess up your account. That said, depends on the time frame, and it depends who you are and how good you are at your game. How's it, Shane? Good to see you. Good to have you on board. I'm actually thinking of moving the Thursday show forward a little bit earlier. I need you guys' input on that, what you feel, if it's better, because the Tuesday shows are pretty much probably busier, and I'm not sure if we're getting that many people from that side of the world on a Thursday. But I did want to kind of do the Thursday later so that we pick up the US Open and that sort of thing. I don't know. I'll think about it, but let me know. I know you're from Oceania. Aha. Sydney, Australia. So that hopefully answers that question. Hopefully I didn't leave the question over here. No, I didn't. I did take it away. Okay, so yes, last week's winner was Chippo. Well done. Let's go and have a look at the news while we're here and see what we've got going on today, if anything. What's on the news today? The Fed, not Trump, is back in the driving seat for stocks. Okay. The $11 trillion gap costing Trump's big, beautiful bill. Trump says he will set unilateral tariff rates. Americans flunk on retirement. NVIDIA, Samsung to take stakes in robot startup, blah, blah, blah. Oracle stock jumps as AI boosts revenue forecast. Everybody's going on about AI these days. I don't know if AI is going to be the ultimate answer that's good for us or bad for us. I really don't know. So today's video that we're going to pick from, guys, is this one. The Trader's Guide to Profitable Break and Retest Strategies. The Trader's Guide to Profitable Break and Retest Strategies. We're going to pick a random comment off that video in about half an hour's time, maybe 35 minutes. And someone will want a two-step 10K challenge. Yeah, sorry, I can never get that right, can I? From these guys, Fund Your FX, who kindly gave it to us to give to you. Okay, so go back to the charts. And let's get back to the question of system and strategy again. I've been having a lot of problems with system and strategy. System versus strategy. After talking about system and strategy in the last live show, in depth, I had an insane amount of people still telling me about, or still not understanding, the difference between looking at the charts and having a strategy. One person, people don't like to believe that they've paid for a course, they've learned a system, and now it's all about psychology. One guy even commented that if you think it's all about psychology, you're an idiot and blah, blah, blah. And that just means you're not open to it and you don't understand it. I'm not saying that I'm perfectly right. I'm not saying I'm perfectly wrong either. But what I am saying is you've got to understand the difference between psychology and the lines. I'll swap Portugal and Australia. So what I'm saying to you guys is you've got to learn to separate the lines, what you see in front of you. You've got to learn to separate that from the actual trade. So if you were trading this Australian dollar, Canadian dollar, you've got to learn to separate this from what I just showed you with the stop loss, the actual positioning and the strategy, and then get over the fear of missing out, get over the impatience, get over the inability to not be able to manage your risk, the fear. It's, if you don't get over that, if you don't realize that it's got a lot to do with the mind, it's got a lot to do with the psychology, then you're going to end up in that never-ending cycle of doom. You're going to end up losing. Believe me, been there, done that. Sold the t-shirt a number of times, and it always ends up in disaster every single time. Not just with me. It's a number of people I've seen out there trying to beat the market with lines, trying to beat the market with squiggly lines. And you can't. The only thing you can do with the lines, you have to understand this, the only thing you can do with the lines is manage your risk and draw a line in the sand and pick a high probability trade. I really struggle to get this over to people. And I feel that I can actually explain things pretty well, but I don't know if there's a mental block or if there's something there in a lot of people that they just don't want to hear it. You do need to use the lines. You do need to have a system, and you do need to have that system that will help you to manage your risk in the high probability trade, because our brains are not wired to be able to take a blank piece of paper and just say, I'm going to buy or sell. Our brains are not wired to do that. We're never going to feel comfortable doing that. The only thing that makes us feel comfortable is feeling like we've got some kind of edge over the system, some kind of feeling that if we trade above that line, then it's going to be positive in our favor. So, yeah, I get that. But you have to separate that from the strategy of making money, which I explain in every single video. And I don't know if I must go over it all over again here today. We did do it in the last live show. And obviously I do it in all my videos as well. So we don't want to overdo it, do we? Oh, no. Shane, you can fit 9 kids in a 2-bedroom flat, can't you? Yeah? You'll be fine, man. You'll be fine. I've always said I like having homes where I can swing my arms around, where I've got space. I like having space. Space is important to me. I guess if I couldn't afford the space, then I would, take what I could get. But since I can afford the space, I'll have the space. I enjoy the space. I really do. Helps. And it's comfortable. I tell you what, some people are surprised that my bedroom's bigger than some people's 2-bedroom flats. But anyway, not to boast, I'm just saying I like the space. Okay, so Wasim Khan. Hello from Sri Lanka. Hey, welcome. Good to have you. Good to see you here. To have you around. Actually, if I travel, I do like to stay in the lodges and the resorts and the hotels and things like that. I enjoy doing that. I'm actually thinking of starting to start moving around again, and I'll do the trading show on the road for you guys if you enjoy it. Have a bit of fun. We'll see. Bad numbers on the news. There we go. That's the one I've been waiting for today. Bad numbers on the news. Here's the thing. Bad numbers on the news. You know what they're going to do? They're going to make all the economists excited. They're going to make everyone excited. Everyone's going to panic for 5 minutes. And then it'll all come back to normal again because the actual figures are all... Nothing's changed. Everything's still there. The companies are all still operating like they always do. Everyone's still operating. The world hasn't ended. Everything's still normal. It's actually amazing how people react to these numbers, and sometimes the economists react to them completely opposite to what you expect. So don't concern yourself with weekly numbers. I spent my life waiting for Thursdays and the jobs data and the non-farm payrolls, and oh my word, I tell you, every day something. I think it drove me insane, to be perfectly fair. For years. And like I say, before I had the aha moment, before 2008, I used to intently trade these squiggly lines. I mean, I thought the squiggly lines were going to make me rich. I thought the squiggly lines were going to make all my profit. It's only later on that you realize, no, these lines don't do anything. They're just lines. Ooh. They help you decide which way to go. That's all they do. HR, are you asking me if I'm in the UK? No, I'm in Cape Town. I'm in South Africa. No. I'm in good old Africa, me old China. Oh, no. This is where I love it. This is where I live. That's where I stay. The only other place I might consider staying would be Australia, but that's also changed a bit. And I like my Africa. I like it here. It's my home. Cape Town is definitely the spot. That's beautiful here. The weather's perfect all year round. It's got lovely everything. No, I can't complain. Never complain. Love the people. I grew up with the people and my people. So no, this is my home. Yeah, I might actually consider that, coming down to Australia. I got friends living there as well, so there'll be a lot to do besides yourself, Shane, and whatnot. Yeah, got lots going on. So yeah, let's. I might still do that as well. Part of the holidays. Get on an aeroplane, go to Oz, spend some time there. Go and see the sights, as they say. Wasim asked, do I trade gold? I trade everything. If there was orange peels to trade, I would trade it. Because it's not about the lines, it's not about the products, it's about the strategy. So, yep, there's gold. There's your gold. What's gold doing at the moment? It's in a range. and it's squeezing into a bit of a triangle, and it's going to have to break out either way, as I discussed at the beginning of the show. This is why I trade everything, because if I was only trading gold, I'd be like, oh, when am I going to get a trade here? I'd be trying to force trades. I'd be looking for trades. I'd be dropping down the time frames, looking for an entry point. And I actually don't want to do that. I don't want to be, forcing trades, looking for trades, searching for trades. If you trade everything, or most things, and you just page through the trades, have any of you ever noticed that I can give you a trade of the day just about 99% every single day? And that's because I trade everything. Everything. If I only traded one product or two products, I can promise you I wouldn't be able to give you a trade of the day every day, that's for sure. So there's old Shippo saying gold is bullish. Now, are you saying that because you see it as bullish? Are you saying that because you have a bullish trade? Or is there something that I'm not seeing that you're seeing? So, what I'm seeing is there's a trend resistance, there's a trend support, there's the price in a range, not going up or down, and it's squeezing into a narrow point. It's going to break out one way or the other, should resolve to the upside because we've had a bullish run before this. But this seems to have decided to consolidate for now, and it's consolidating into this general area between the 3,000 and 3,500. It's not going anywhere right now. Don't get your mind caught on one product. Don't get your mind sucked into that the gold's going to do this or gold's going to do that. Keep your mind open and look at the markets for what they are. You know what you tend to get your mind caught up in trading a lot? You'll find that a lot of people will call some traders can only trade long and some traders can only trade short. Isn't that weird? That's because your mind is caught up in that flow. The markets are bullish or the markets are bearish, and I only trade short and I only trade long. And you see, my mind is that much more open in the markets. I see both ways all the time. Red or green, the only difference that makes to me is which way it's going. And if it's going the red way, I'll go with it. And if it's going the green way, I'll go with it. I don't care which way it goes. I take the trade according to the way that it's moving. So many people get caught up in one direction. So many people get caught up in one product. So gold for me is or has been bullish, and in the shorter time frames today, you will find that it is bullish in the shorter time frames today because that long green candle. So I mean, if I take this down to an M5, you'll obviously have a bullish momentum going to the upside. But you must remember, this is the 5-minute chart. Now on the 5-minute chart, these candles are all condensed into one candle on the 4-hour chart. So that information is not that reliable. But if you want to trade on a 5-minute, for the next 5 minutes, this is valid. It's a valid 5 minutes, and it's doing okay for this particular time period. How long do you think it will take for it to change direction if it changes direction? Let's say it turns around and decides to go down now. How long do you think it will take for it to break its trend? It's not going to take a few hours, is it? It's going to take maybe 10 minutes, and it's through. That's how reliable the information is. The information's not that reliable. It'll change in a matter of minutes, a matter of 15 minutes, everything's changed. So that's just all I say is, yeah, it is bullish on a 5-minute, but on an H4, it hasn't confirmed yet. And on a day chart, definitely not. Let's have a look at a weekly chart. Ooh, ain't going nowhere. But yeah, it's bullish in general. It's going on the upside. The general consensus on gold is it's kind of bullish at the moment. Will it stay that way? Who knows? Who knows? Who knows? We'll have to see. The Shane. Ooh. Faster challenge trading gold. Well done, Sepul. That is absolutely well done. That is, wow. That's good. Well done. Congratulations. You're having a really good week, let me tell you. Okay, Shane's got a short bias. So Shane's got a short bias on gold, guys. Everyone go long. Okay. Well, that's great. Well done. That's fantastic. Absolutely fantastic. Okay. So I mean, yeah, if you can pass the challenge trading one product, but I mean, obviously you must be trading on lower time frames, and yeah, sometimes, and I hate to say it, a lot of it sometimes does boil down to a little bit of luck on your side. You know, if you're having a good week, go with the flow. You know, because when things turn against you, they turn against you hard. I have a trending bias. Yeah, it is trending, and yeah, totally agree with you guys. I'm definitely not going for the short. That's for sure. But yeah. Oh, I forgot about crypto. Goodness me. I know we talked about it earlier, but I actually forgot. So you went in at 109. So you went in at the right spot, right up here. Yeah, good trade there. Good trade there. I always forget to trade crypto. I must be fair, you know. I forget to look at it, and then when I look at it, it's like, I should have got in there. But yeah, this is actually quite a good trade. Nice trade. What's your target there, Ruben? 100, I suppose, eh? Probably targeting 100 on the Bitcoin, on the short. How's it, Daniel? Good to have you. Good to see you again. Lovely, lovely. Oh, Fartcoin again. I don't have it on this platform, by the way. I'm not sure what platforms it's on. I haven't actually looked for it. Surprised it even exists. Target 98,000. I was looking at 101, 100,000. Sort of here, this level, but yeah. 100,000. There's your double bottom at 100,000. 98,000. You might be pushing your luck at 98,000, but I do see a level here. My personal opinion, I would probably target 100,000. It might bounce off there. You must remember, the one thing you got to remember in the markets, whether it's crypto, Forex, indexes, commodities, whatever, human beings like round numbers. Just remember, you're not trading against math. You're not trading against algorithms. You're not trading against lines. Trading against human beings. And you know, always I've learned that human beings like round numbers, no matter what. I mean, if you go into a shop and it's $24.99, guy says to you it's 25. You know, people like round numbers, and in the markets as well, you'll find that as well. If you see round numbers, use them. Use the round numbers, guys. So if you see 101,000 or 100,225.3, it's 100,000. People love round numbers. It's human beings, not lines. I'm using CTrader for analysis. Bruman, I'm now match trader is very difficult to trade on. That match trader, Seppo, you can switch it over to Trading View. There's a little button on there that you can switch it over to Trading View. I'll show you. Let me see if I've got one here. I do. Okay. I've also got another one, Trading View, and I've got MT5 and so many different platforms. This is a match trader, okay, account. Now, if you look at this account, you see at the top here, Sheppel, it says Trading View. Just click it over to the Trading View, and then you get this. This is Trading View. It's not as fancy as the normal Trading View, but on a match trader account, this actually does work quite well. Okay, so that you can do that with that. All right, so there you go. Okay, let me close that. We don't. Oh, sorry, I didn't show you that. Actually, that was stupid of me, wasn't it? Sorry. Let me do that again. Yeah. I forget that you guys can't see. I'm just going to put it on there so you can see it. Is it? Not sure if you guys know. You're not going to see it now. Tell you what. I don't know why you guys can't actually see it. Should be able to. I'm going to try and do it again. That's interesting. It doesn't want to show you that particular page. Well, that's quite sad. I was kind of hoping I'd be able to show you that. Interesting that it won't pick that up. Okay. Weird. Technology always beats me, doesn't it? It just won't pick it up. Refusing. Point blank. That's why you guys have got a black screen. Won't pick it up. Interesting stuff. Well, all right. Jebel, you just have to look at the top. At the top right, there's a wonderful little thing there that that'll show you how to get it. I do believe. Yeah, that didn't work. Let me just have a look over here. Maybe. Maybe it'll take me into the trading platform here. It's gonna want a whole sign in, so that's not gonna work either. Okay, so fine, great. I must still do the draw. Forgot about that. Do you take percentage of your profits when you're in a trade? Example, 25%, set number, and then on and on and on. Actually, very seldom. I'll only do that if I'm not confident that it's going to continue on with its run. If I think my trade's running out of steam, then I'll do that. But very seldom, very, very seldom. It's usually when I'm not confident. It's normally when I'm looking at a trade and thinking, I think it's done its time, then I'll do that. But I won't dollar cost average out of a trade. I'll dollar cost average into a winning trade. So, for example, if my trade's doing well, and I'm really comfortable that it's doing really well, then I'll dollar cost average into a trade quite happily. Then I'll jump in, but I won't easily jump out. That's for sure. Let me see if I can actually do that. Hang on. That's fine. We're going to do that. Yeah. BTC will hit 100,000. I think it will go to 98,000. You see, that's a trade where I would lose my confidence at 100,000. So at 100,000, I would start looking at it and thinking, and I don't really want to add to it here. I'd probably start trading out of it. But what I'll do, rather than trading out of the trade in bits and pieces, what I normally prefer to do is take my stop loss. So for example, like here in this US 500 trade, okay, my stop loss was down here and this went into profit way up here. Okay, so I took my stop loss and I moved it up to break even, and then I put it on a trailing stop, trailing this up. That kind of is where I am with it. That is, if it comes back and takes it out, then so be it. Pretty much, you're kind of looking at it and thinking, okay, it's in profit now. Is it going to go further? Let me put my stop loss up to break even. At least then, if anything happens, the trade costs me nothing. And then I'll put a trailing stop on it and it just trails it up with that kind of distance as well. That works for me as well. That makes me comfortable. I've done it with Brent crude oil here as well. And I've also done it on the Euro Great British Pound on my other platforms. So that works quite well as well. So that does that trick. Let me just go over here. Maybe I can actually get into these guys and show you how that much trader works. I don't know. What that noise was. Let's see if we can get in. Okay. Boom, 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 boom. Just want to show you guys something. So to get in there, I need to do that. Hopefully that will let me in. So complicated to get into any of the accounts these days. Boom, 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 boom. Look here. Okay. That just takes you there. Okay, that's interesting. Let me see if I can get us in there now. Still not. It's amazing. I'll have to figure that out sometime. Boom, 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 boom. Still there. Take it out of there. Leave it there. There we go. Depends on the platform. So, for example, the match trader or the some just don't do it, right? Especially a lot of the funded accounts. This C trader does it quite nicely for you. MetaTrader 5 does it for you. Trading View will do it for you as well. You can have a trailing stop. You can do it manually yourself, or you can just set it and just give it a like follow it up at 1 point per whatever if it moves up. And the reason I do it this way is effectively, if you've moved up into a profit, you don't want to take the profit. You don't want to jump out of your profits, but you also don't want to take now a $250 loss when you're $200 in profit or whatever the case. So what I do is I'm putting it up to break even because that trade, when I took it, was costing me $250 if it lost. Now it's costing me nothing. So the way my psychology looks at it is that trade is now free. That trade is now costing me nothing. And then all I do is attach a trailing stop to it, which what it does is it'll run at that distance with it at 1 point per move. So it'll just keep that distance and keep on following it up. Normally, if I get up to the take profit, I'll actually take the trailing stop and I'll put it right up behind it. Close, close, close. If it comes back and takes it out, then it's gone. And it's pretty much the same as the way you're averaging out of a trade. I'm sort of just covering myself by putting the trailing stop behind it. Most platforms will do it automatically for you. This one does it automatically. There are one or two though that I've noticed that don't. That leave you high and dry. That one that I was trying to show Chipper just now, I mean, that's $100,000 account, but it won't give me an auto trailing stop. So whereas, like your MetaTrader 5 does, your TradingView does, they do give you auto trading stops. And the auto trading stop, I mean, you don't have to have it on auto either. You can work it manually. You can just check back on it and just move it around as you feel you need to. And I have been known to take a trailing stop like this when I just feel like, well, you know what, wait a minute, when it comes back to take it out, and I'm thinking it's too early to be taken out of the trade, I'll take my trailing stop and I'll put it back to where it should be, maybe at the cost or something like that. But as it stands at the moment, this one, for example, there is a level here. So my feeling is, well, kind of if it breaks through that level, it's done. So it's okay. But if I feel like I should still be in the trade, then I'd rather stay in the trade. You see, the trouble with dollar cost averaging in or out of a trade is it affects your overall profit in your strategy. So, our strategy is to try and make more on the wins. But if you start dollar cost averaging out too early, then you don't get the full benefit of the profit. And that's where the issue comes in. It's a bit like the guys who talk about dollar cost averaging into a trade. So, for example, they're not confident in the trade to start with, obviously, right? So their strategy is, I'm going to take trades. I want to risk $250, but I don't want to put it all down at once. So what I'm going to do, I'm going to risk 10% of that to start with. And then as it starts going in my favor, I'll add more, add more, add more, add more, add more. Or if it starts going against me, add more, add more, add more, sort of dollar cost into the trade. The trouble with that is if you go in at 10%, for example, $25 instead of $250, and it just shoots in your favor, then you're going to have to take 10 trades to make the profit that you wanted in the first place. So it doesn't compute, it doesn't work out. And then for the ones that went against you, you kept on dollar cost averaging into the ones going against you, and those ones turned out to be quite big trades. And when it doesn't work out, when it doesn't go in your favor or doesn't break even and keeps on going south, you end up with big lost trades. And when the ones that go in your favor are small, tiny little trades, and it just doesn't work. It never works. So dollar cost averaging into a trade doesn't work. And then dollar cost averaging out of a trade will give you, you'll make a profit because you're going into the profit, but you're not going to make the full benefit of your profit. So your profits are going to be less. If you're going to dollar cost average out of any trade, dollar cost average out of a losing trade and take the losses. So if you just feel like I don't want to lose $250 on this trade and I can see it's going south, but I've got a feeling it might come back, then get out of half the trade before it reaches your stop loss. And maybe take a $50, $70 loss or whatever the case on it. And then you've got half the trade. And then your risk is halved. And just, your total risk is now 125. And just live on that, something like that. You know, if you're going to dollar cost out of anything, dollar cost out of your bad trades. And if you're gonna get out of trades, it's not a bad thing to get out of a losing trade quickly. It's not a bad thing. If you don't feel comfortable with a trade and it's going against you and you want to dump it, don't feel bad about getting out of it early. You don't have to hold the trade until it loses. You can dump a trade early and take less losses. So you'll have a whole gargantuan bunch of small losses, and you won't be able to take your phone and show people your phone and say, look at all my wins, because there'll be a lot of little losses. But it's that big one. It's the big win that makes all the difference to your account, not those little ones. Okay. Blue Mango, good day. How's it? Good. Blue Mango is a good name. It's almost like Sir Lunch-a-Lot. I love Sir Lunch-a-Lot. What's the other one that was so good the other day? I can't remember. It was also great. Besides Sir Lunch-a-Lot, it was another fantastic name as well. That's brilliant. Love it to bits. Okay. So I hope you guys know which video we chose. Boom, boom, boom. For those of you who don't, the Trader's Guide. Trader's Guide to Profitable Break-in Retest Strategies. So for those of you who haven't left a comment, now would be an absolutely marvelous time to do so. Just having a look at something here. Getting things ready so we can do the draw. We're gonna do the draw in a moment. So I think what we'll do, we'll go over there and we'll see who wins themselves a little account today. The 2-step 10K challenge. And I don't know how long we're going to continue on with this, to be honest. Still going, so might as well do one next week again. So let's do this week, and we might as well do one next week again. Why not? All right. Let me give somebody an account. What the hell? Okay, guys. Hopefully you guys will be on this page as well. And we're going to use the Trader's Guide to Profitable Break and Retest Strategies. We're going to go on that one. So I'm going to take that one's link and put it into the random comment picker. So guys, this is very kindly donated by FundraFX. Yeah, they're donating it, and they do have instant accounts for you guys. If there's anything you need, there is a link in the description. Someone did mention to me the other day, you know, with the USA not being big on the CFDs and things like that, so there could be an issue with that. So keep an eye out for that. But further than that, it's good for you to practice on, good for you to have some fun on. So I hope somebody wins it. Chopper, you can't win again, dude. Okay. That's Ricken's gonna win again. Shall we see who wins, guys? Shall we see who gets this giveaway? And just remember, YouTube's got nothing to do with this, guys. And this is all with the FundraFX. They will contact you, and all you have to do is send me your details, and we'll get on with it. Let me just get things together here, and then we can do the little draw for you guys. First thing I gotta do, get the information out. You guys are gonna have to send me information to get this. Okay. So let's see who gets this today. You guys ready? A $3 million account, eh? $3 million account is nice. Anything goes. Let's have a look and see who gets it today. Let me reload the comments. And let's pick a winner out of those comments. Why did it choose me? I've got to do this again, guys. My comment is the first one on the list, right? And it chooses my comment. Are you kidding me? Yeah, let me reload this thing. I won my own account. Can you believe it? We're going to try this again, okay? We're going to try this again. Obviously, I put a comment at the top for you guys to get your free Forex book. And it picked that. Unbelievable. Oh, no. Okay. I hope you're all in. The Trader's Guide. You want to get in, Daniel, you have to get in now. Okay, so here we go. Continue. Let's hope it doesn't pick me again. Ah, there we go. The Drunk Monkey 89. Hi, Sir Rob. Thanks for the video. Wonderful help video. I learned a lot from it. Okay. Well done. You have won the Drunk Monkey 89. That's absolutely marvelous. I wonder if you're on the live show. If you are, let me know. It would be great. Tell me who you are. That will be even better. The Drunk Monkey, eh? Okay, let me just see. I'm going to reload here and see if your information is around. And you are here. Fantastic. Congratulations. Well done. You are the winner of the two-step 10K challenge account from Fundra FX. And Corey will get hold of you. I need you to send me some information. So I'm going to put this in the description here. I mean, in the comments here for you. There you go. I'm just going to paste that in there. That message is for the Drunk Monkey. The winner is to contact me at that email address with the details that I've put there. And then they will put your account together for you and send it through to you. That's fantastic. Well done. That's always good. I love giving these little accounts away. They're brilliant. And it's just something for you to get a feeling with, because what does a demo actually help you? You know, a lot of guys have said to me, yeah, but, you know, guys who are starting out should only work on a demo account and shouldn't have a funded account, and a funded account, you know. And I'm like, you know what? It's actually such a great thing because you've got something to work towards. With a demo account, you've got nothing to work towards. You're just taking trades willy-nilly based on whatever. And with a funded account, you've got something to play with, something to work towards. You've got something to win, okay? And, you know, if you get approved and you start making some cash back, that's even better. And then it prepares you, if you haven't put real money in the market yet, and it prepares you for that moment when you put the real cash into a real normal cash account, prepares you well for that, because your psychology already is in the right place when you get there. If you just jump straight from a demo into cash, it can be quite daunting, let me tell you. I can tell you that right now. It's an absolute pleasure. And I'm so glad somebody's won it again. And the drinks are on Monkey. There we go. We just got to find him. We don't know where he is, but yeah. Can find him and take him down the pub. Okay. That's brilliant. Well, we'll do another one next week. Why not? And we'll see if we can get another one going. So just all you got to do, guys, just leave a comment and on the videos, and then effectively we get to it, and somebody gets it. Somebody gets it. Yeah, he's drunk. There we go. Perfect. It's the way to go. It's the way I like it. Remember, guys, I think I say constitutes financial advice. These videos are for entertainment only. Yeah. So system and strategy, I do hope you guys have figured out the system and strategy, the difference between the system and strategy. As I tell you what, I've been struggling with that with the guys. How do you separate charts from an actual realization that the money's not made in the charts? I'll tell you, that's where the difficulty comes in. You know, Shepard, I don't know. I don't know who reaches their funded accounts and who doesn't. They don't tell me. Okay, that's pretty confidential between you and the funded account. And unless you jump on the comments or jump onto an email with me, or if you actually tell me, here, I don't know if you've actually succeeded or not. You know, I hope you do. It's great. If you don't, so be it. You know, move on and keep it as a learning experience. All I say is, I don't know. I don't have that kind of information, and any information that you give me for this to go through to these guys is protected and doesn't go up. So it's, you know, information has to be protected at the end of the day. So no, I don't know, Shipper. I can't tell you who's won, who's not. It's up if somebody volunteers to tell me, so be it. Because it's not coming. I don't own these prop firms. I've got nothing to do with them. Like I said to you guys before with prop firms, I was never a fan of them up until this year. Well, I'm still not a fan. I'm just how can I put it? I feel it's not a necessary evil, but a worthwhile one. Let's put it that way, in the sense that it clicked on me that we're going from demo account to cash account, and you're taking someone who's new to the market, who's watched all these videos where everyone's told him or her that you're going to make millions in the market in 15 minutes. And it's exciting to think that that's possible. And you go on the course and you spend, I don't know how much you spend, but lots of money. And you spend all this money, you go on this course, and they show you all these squiggly lines. They give you all these abbreviations and all the terminology of the market. They even tell you who started the stock market. And they send you home. And you've done a demo with them, and you've sat with a group of people maybe, or maybe you did it online, I don't know. And you go home very confident in the knowledge that you now know how to trade. You now know how to do this. Worst case scenario is they teach you how to do it on a 5-minute chart, which is insanity by itself, because that's, even the pros struggle with a 5-minute chart. And you go home and you go, I know what I'm doing. I got this. And you sit down and you start trading with 1 month's experience. How long is a course? I don't know. Because you're all excited. Sometimes it's a chap who's retired with his pension, or sometimes it's just, you know, you got retrenched from work and you've got some money, and whatever the case, all right? It's not always just a billionaire that's just decided to start trading. 9 times out of 10, it's not. So you get into trading with a whole view and the whole excitement of, I've got this whole future going for me trading, and I'm going to jump into trading now, and I'm going to start trading. That course taught me how to trade. They never taught you about strategy. They never taught you about psychology. They taught you about these lines, and they said these lines are going to give you a win rate, and they're going to make you loads of money. The first thing that happens is you start losing, and the pain sets in because it's really painful, and you can't understand what's going on. And you start losing more and more and more. And the more you lose, the more you put in to try and get it back, and you lose even more because now you invested in it. And it just gets worse and worse and worse for you. And that in itself is just one of the worst things that can happen to people. And this is why this year it sort of dawned on me that, wow, it's not really a bad idea that you've got these prop firms and funded accounts available. Because now, instead of jumping from that to the cash account where the belief is that you're going to make this money, perhaps let's have a step in the middle. Let's have a funded account that you pay a couple of $100 for, maybe less. I saw the other day that Fund Your FX was giving them away for $10. But anyway, okay, just a bit of fun or whatever the case. But now you've got something where your psychology is not on demo. Your psychology is on, I need to win this, I need to make this work, and I want to get some profit from this, because obviously you offered profit sharing on these accounts if you follow the rules, etc. So now you get involved with these funded accounts. What they teach you, number one, is the discipline, because if you don't keep the discipline, what happens? You lose the account. If you don't manage your risk, what happens? You lose the account. So it teaches you those things, number one. And number two, it gives you the psychology of, if I mess this up, I'm going to lose it. But on the positive note, you can only lose what you paid for the account. You can't lose your entire pension, your entire package, retrenchment package, or your entire $100,000 or whatever you've got to your name. You can only lose that couple of $100 that you paid for the account. Maybe it's more, maybe it's less, but that's all you can lose. And also, if you make a weekend mistake or a beginner's mistake, whatever the case, you only lose what you paid for the account. Gives you that knowledge, gives you that insight. You do that for a period of time, maybe a year, maybe two. You've got some money in the bank which is sustaining you. And you see, you start becoming profitable, you become consistently profitable, you're working well with the funded accounts. Now you're ready to transition to that cash account, to that leveraged cash account. And, you know, it took me a long time to actually come around with this, because I had the same mentality as a lot of people of, these oaks are just like trying to take your money and all the rest of it. Maybe they are, I don't know. But there's a lot of guys out there that have made a lot of profit with these guys. And all I say is, it's a nice transition. So this year I sort of had that once again aha moment where I thought, this is actually a good idea. This is actually great, because it protects you as you move into trading. You get the knowledge, you get the psychology behind the trading. And when you're ready, you can put the real savings into the deal, knowing that you know what you're doing. That's just my 50 cents worth. It's just the way I see it, my logic behind it. And yeah, that's where I am with it. So now I've warmed up to them. Whether they're good or bad, I've warmed up to them. And I realize that they're providing now a service in the market, which is actually quite useful to everyone. I do hope you make that funded stage, Chapo, and you can, and maybe you'll be someone who tells me you did it, and that will be great. Yeah, Elaine, Chapo won it, and no, this week's winner was, sorry, the Drunk Monkey. The Drunk Monkey. Sorry, the Drunk Monkey, there he is. He's going to send me an email with all his details, and then I'll forward them through, and then they'll get to him, and they'll open his account for him. And I wish you all the best and all the success with it. But as I say, yeah, that's my feeling on those particular things at the moment. And that's why, you know, I do have a couple of links to funded accounts in the description, which are pretty much, they don't hold a lot to you, you know, they don't hold you back a lot with too many rules. But I don't recommend any particular specific accounts or whatever. If you want to choose anybody, do so. Someone that suits your area or whatever the case. But, you know, all I say is it's helpful. It's a, like I say, not a necessary evil, but a useful one. Okay, so that's good. Right, so now I just want to have a look here and see if what we're getting. So yeah, at least we've gone over the funded market things, you know, and the biggest, I'd say the biggest question that people ask people like us on these platforms is why does a profitable trader have a YouTube account? A good question, because there's a lot of guys out there with YouTube accounts showing people how to trade. Well, number one, there are people like me who just enjoy company and enjoy telling people or educating people or showing people things. But I think the number one reason for my side is boredom. And yeah, I got bored and I thought this is something that I can do. And I do enjoy computers. I think most people who trade do enjoy computers, don't you think? You know, most people who trade enjoy charting and screens and monitors and all that stuff. Come on, let's be honest. And I'm one of them. And I know when I started, we didn't have it, but it was a dream to get it. I mean, I loved getting it. I enjoy the stuff. I enjoy the challenge of it. I enjoy the fun of it. And yeah, I have fun with it. So from my perspective, you know, it's a stupid question to ask. You know, why do traders who are successful have YouTube accounts that educate people? Well, you know, and then they ask about, especially the guys who are making a lot of money out of it. There are guys out there with courses and stuff like that making a lot of money out of that. I don't know anybody who doesn't enjoy making money. That's fun. So that too, I don't begrudge anyone that. That's fun. That's always good. So yeah, I think it's the dumbest question that anyone can ever ask. Be perfectly fair. And I see they ask it a lot to other guys more than me. I mean, I've been asked maybe once. But most of the other guys do get asked that a lot. And some of them maybe don't realize why they're doing it. But yeah, some of us just have this inept urge to tell other people about it. And like I say, as well as the fact that boredom played a big part in it with me, you know, just trading is insanely boring. Let me tell you something, guys. The actual making of the money is the boring part, but making it is exciting. That's the fun part. Okay. Some prop firms copy trade your strategy behind the scene. They make lots of money. Helping others succeed is a powerful thing to experience. Do you know what, Chipper? If somebody wants to copy my trading strategy, I mean, that's why I'm on YouTube as well. I'll be the proudest man on earth. Please, by all means, go out there and make money. Do you know what? There's enough to go around. There really is enough to go around. And I'll be so proud if everyone says, I'm using Rob's strategy. Rob's the oak. His strategy is the best. You know, I'll be the guy standing there saying, you see, look at that. You know, I'll be the happiest man on earth. So no, please feel free. If a prop firm was to take my strategy and say, that's the strategy to use to make money, yeah, man, I'll be proud. I'll be chuffed. I'll be like, wow, you know, these guys took my idea, you know, well done. So as I say, there really, really is enough to go around. And yes, and as Daniel says, it's actually better than making the money. You know, one thing I learned in my life, and I'm a lot older now. When I was younger, I used to think that getting all the sweets for myself was like, wow, gobble, 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 you know, exciting. It's great, all the nice things and shiny things. And then it didn't take me long to realize that it's actually much more fulfilling to see somebody else happy, much more fulfilling to give it to someone else. And you can't believe it's actually a hell of a nice feeling to be able to help someone else, to be able to give, and to see the excitement on their face is much more fulfilling than fulfilling yourself. And for the younger guys, take that in a pinch of salt. Take it in mind, though. It really does, as you go through life, you figure that out, that it's much nicer. It's a much better feeling. And the closer you get to my age, the older you get, the more you start to realize that you really can't take it with you anyway. What you going to do? Are they going to bury it all with you? I doubt it. So do something with it, dudes. Do something. No, Shane, only you get the ads, remember? We've sort of got this algorithm set up so that only Shane gets all the adverts, and then they all go to him. You guys want to tell you how old I am? I'm not that old, but 30. Yeah, just double that, Bruman. Just double that, and then you're there. Double that. Yeah. I'll just say, it's nice to have all the nice things, but it's much nicer to be able to see someone else excited. It's a pleasure, Shane. I'm glad you're enjoying the ads, and I'm pretty sure you don't buy anything off the ads. Who actually buys something off ads? I don't know. I guess if you're watching an ad and it's constantly beating you on the head, I always remember the ad, much more munch, the lunch bar. I remember the coffee ad. It's not inside, it's on top. But I can't even remember what that was. Was it? I don't know. Can't remember what coffee it was. I remember the Red Hot rum, none so bold. I remember that one. But most of the ads fly out the window. And do I actually buy anything from the ads? No, I don't know. I don't think so. Don't think so. Don't think so. So yeah, guys, just remember as you go through the trading that it's not about these lines. These lines will help you. These lines will send you in the right direction. And I'll give you videos which will show you how to use these lines. But it's all up here. It's all in the psychology. And it's all in the strategy. These lines are not the things that are going to make you the money. And when I say something's 50-50, wow. Don't confuse the risk to reward and the strategy of stop loss with any trade is 50-50. What I'm trying to explain when I say a trade is 50-50. Cremora, thanks, Shepard. That's the one. Cremora. Cremora is like a powdered milk that they used to put on top of coffee to make it nice back in the day. So back to this. When I say a trade is 50-50, what I mean is if you took all the lines off this chart and I said to you, choose a trade, you'll agree with me that you've got a 50-50 chance if you buy or sell. And unfortunately, no matter how many systems I put on this chart, how many different systems I put on there, do you know what? Your odds are still the same. Your odds don't change. It's still 50-50. The only difference is you now have picked something that makes you feel more comfortable because it's happened in the past and it'll probably happen again in the future because humans are creatures of habit. That's when I talk about 50-50. But when I talk about strategy and winning and risk to reward, then I'm talking about the strategy. Then I'm talking about something completely separate from the charts. The risk to reward doesn't have anything to do with the charts. All that has to do with is I'm picking a reward that's going to be better than my risk so that over time I'm going to make more on my rewards. That's all. That's got nothing to do with the charts. The charts just tell you where to put it. The charts just tell you how to manage your risk and where to put your risk. That's all they do. They just give you a more cozy feeling when you trade. And Shane is shorting gold. Eek! Wow. Okay. Are you doing that on a 5-minute chart? Let's have a look. Alrighty. I think Shane's shorting it on a 5-minute chart. And I can see why. You see, if you look at a 5-minute chart on gold, for those of you, look at that, it's broken through. They're shorting gold on a 5-minute chart. What I do like to do though, Shane, is, look, I don't trade on the 5 minutes anymore, so I'm not going to bother with that. But what I do like to do is look at the overall picture. And then when I go down the time frames, try and trade with that trend. But yeah, okay. There's not a big move, eh? It will come back to retest this. Let me just see, is there anything here? Yeah. Actually, Shane's short's not a bad thing, because this is alive and it's just moved. It's just moved up to that level. So that is, the resistance is now moved, and it looks like it wants to come down from there. But there's something else that I've just seen that might be of use to us. Is that a double top? Ooh, look at that. Shane, you might be in the pound seats here, dude. You might actually be in the pound seats here. That looks like it might just be a double top running across there. Giving you a... I'll put too many lines on here now, haven't I? Let's take this one out. Giving you that run. Yeah. Shane, looks like you got a good trade, lad. Looks like you got a good trade. Yep, 5 minutes. I thought you were trading on the 5 minutes. I could see that. It's a fake out on the higher time frames. Well, there you go. You were quite right. It was a fake out because your trend was there, so that didn't close. It faked out. So it changed and it went down that way. You got your fake out, and now this is alive. This is moved. So now it's above. So now it's not even out. And you've got your red candle developing, but you've also got this double top. I love double tops. So that's telling you that that's a level of note. So there's a good chance this is going to come back down again. So that looks like you might get your short. Yeah, triple top. Could even be a quadruple top. Look, gold is really in this range. I think it's sitting in this range. I've got to be straight with you guys. This looks like it's sitting in this range. And I just don't see it. We can even move the range up to here. That's fine. Or you can keep it down here. That's also fine. That range is in, eh? That range is in. You have got this running down here, but that range is in at the moment. It's sitting in that range. And it pretty much wants to stick around there for now. And like I said to you guys, I think it will. I actually think it will stay there for a while before it starts running away. What I need is for this one to start working in my favor again, which it is. Okay, that's good. Good news, good news. Come on, Brent, don't go down. That'll just be painful. How many times Brent has let me down? Okay. Well, there we go. Great stuff. Short everything. Or short of cash, short of cash. It's time to long your cash. Yeah, time to make some money on the cash. That's for sure. So I had a Euro Great British Pound trade on the other account that I was trying to open earlier. Ew. don't do that. That doesn't look comfortable. That looks like a top. So let me just, where is it? Sorry guys, I just need to go in here. See how that trade is looking. Euro, Great British Pound, $250 up. There we go. Let's, see what that looks like. How are we looking? Time to take that profit, I think. That one out. Okay, just see US Brent as well. Okay. Well, that account looks pretty strong. Okay, there we go. US 500 still going up. Brent crude oil still going up. Australian dollar, Canadian dollars turning around. Gold had two nice moves today. I have a pending order to sell 33.78.82. Thought you're short already, Shane. Thought you're already short. Uh-oh. Looks like it wants to push up. 33.92. Ah, you got one short, one long. Okay, cool. Righty. Okay, so I actually dumped the Euro Great British Pound trade now, guys. And I have my reasons for it. It wasn't on this account. Sorry, it's on another account. But I had it long all the way from down here. Decent profit. And I looked at this long tail down and on the other chart. I don't know if you've noticed the different platforms, different charts. But yeah, I had a quite a decent tail on the red candle as well. So looking at that, there's a bit of a top here, bit of a level, sort of a double top as well, a flat top here. There's a bit of a resistance level lying around here. So I kind of looked at that and thought, you know what, if I draw it in here on this one, you'll see it as well. Pretty much around that level. It's hit that level and it's coming down. So I decided that's enough for me. I'm out of there. Good profit. Put it in the bank. That's probably going to come back down to these levels down here and try and take some more money. So I'm happy to take that one out. So I've closed that trade out. If anybody else is in that trade, because I did call it the other day. Okay, just so that you know that I'm done with that trade now. And then the Australian dollar, Canadian dollar is concerning me as well. This is also a long trade. It's starting to pull back, but I don't think it'll go far. It might come back to retest and then go. This one can stay long. That's fine. My biggest concern is my Brent trade. The Brent trade is giving me pain. 1, 2, 3, 4, 5 red candles. Oh, not nice. I'm hoping it doesn't come all the way back down to here now, because that's just come on, man. Anyway, what's my profit on there? 235 comes down to there. I'm keeping it. It's fine. I'm really hoping that Brent doesn't come all the way down now. Yeah. Green and L. If it doesn't turn there, it's going up or fake up a bit before down. I'm also looking at gold. If it gets below 33.70, I will look for shorts. At the moment, I'm looking for long setups with targets around 34.20. I think most people are calling it long at the moment. Shane was calling it short on the 5-minute chart. I think most people are calling it long at the moment. It remains to be seen. It does need to break above this 34 level. I'm calling it around figure 34, 33.90. It's got to break above this level. So you're probably going to be buying at 34. And your target is more like up here, the 34.60, 34.80. It could even get to this 35. So if it breaks to the upside. But if it breaks to the downside, it'll probably come back down to this levels down here, sort of like 33.40 before turning around and maybe bouncing up again. There does seem to be a bit of action in this level. Let's do this. Let's change things up a bit. I'm going to put that there. And then I'm going to put another trend line along here. Guess what? There's a nice railway line for you. There is that resistance there, but look at that. Now you've got an upward sort of trajectory going in there. And that's just going to tell you that it's breaking to the upside. That's all it's going to do. Then you've got your tread. So it's going up, down, up, down, up. That's 35 down to 33.75 again. So there's your gold. Gold's bullish. Yeah, okay, in the long run, but it has to break through that level. It does have to break through that level. You see how many lines can confuse you? So if you keep it simple and keep less lines on it, you're probably better off. But yeah, the main support is all the way down there. It's quite far away. The main resistance is all the way up there. It's quite far away. So you can, let me just cut this one out of here. We don't need that. That can go. There's your gold. I would say most people are calling it bullish at the moment, rather than bearish. Boom, 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 boom. Yeah, Shane, that's the difficult thing, is if you trade too many different time frames, you kind of conflict yourself, because, for example, I'm long on the US 500 overall. It's like an overall picture for me. So if I'm now start trading on the 5-minute charts, I'm going to start wanting to take it short, and I'm like long, so I'm trading against myself, and it gets complicated. That's why the market's 50-50. It can go up or down depending where you are in the market. Does VWAP work for you, Blue Mango? I find that VWAP only works on the lower time frames. On the higher time frames, doesn't do a lot for me. The higher time frames, it kind of leaves me sort of with nothing. Doesn't do a lot for me. Like I say, I don't trade with all these different indicators. I don't use them. I don't bother with some average true range, VWAP, Bollinger Bands, all this stuff. I've traded with it all. I've tried it all. I've used it all. I've tested it all. Most of it is lagging. Most of it's a lagging indicator. And but it's just a line in the sand like everything else. And it's still going to give you the same odds. You're just looking for the odds that are better than other odds, but they're all the same. Whatever makes you comfortable. Whatever makes you comfortable. That's the important thing in the markets. Choose a system that's going to make you feel comfortable. Then you'll be all right. I don't know if the drunk monkey's still here, but don't forget to send me that information, and I'm going to need that. I only use VWAP on lower time frame charts. Okay, yeah, thought so. Yeah, no, I've tested VWAP a number of times, and it doesn't work on the higher time frames at all. A total waste of time. But yeah, on the lower time frames, you can play with it. Do you use it more as a magnet, or do you use it as a how far away it is thing, or a breakout? There's different ways of using VWAP. Some people use it as a magnet, others use it as a center point, a breakout. Some people use it with Bollinger Bands. Bruman's like me. Close my eyes and pick a spot on the charts. 100%. Might as well. I mean, you might as well. To be fair, I actually did a test the one time, and I took a week and I said, I'm just going to buy or sell. And I can tell you I did just as well doing that as having the lines on the chart. So it makes no difference. Chain reversion to the mean. It really, it totally doesn't make any difference. It's insane. But this is what I'm trying to get across to everyone. You should see some of the comments I get, but I guess it's guys that are selling courses or something that are commenting and trying to tell me that I'm crazy. But I'm trying to get across this to everyone that you don't even need lines on the charts. The charts are, it's just there to give you the choice of trade and to manage your risk. At the end of the day, you need a strategy to make money. You need a business plan. You need to manage your risk. That's it. Triple says some indicators are there to distract you and confuse you. You know, actually, every single system in the market, every single indicator in the market actually works if you use it correctly. But if you put them all on the chart at the same time, they are going to confuse you. That's for sure. But I don't think they're put there to confuse you. I think just everybody thinks that they've got the right system. And there's a lot of people out there, believe me, 80% of people believe that there's a system that's going to make you money. 80% believe that there's an indicator that's going to make you money. There's not many people out there that, like myself and Bruman, who believe you can throw a dart at the chart and it'll work out the same way as if you've got a system. Okay, so it's very difficult to get that across because nobody wants to believe that. Nobody ever wants to believe that that's the case. And why would you? So you have to have a strategy as a retail trader. You know, the pros, what you don't understand is the guys that are sitting at real trading desks with other people and big companies, whatever the case. I mean, like I said, the most profitable trading company on the street was winning 20% of their trades. But these guys have got information way before you've got it. And most of them are not worried as much about the lines as about the information they're absorbing that's happening. They know something's happening before it happens. So they base their whole trade or their whole concept on that information that they're getting. They're not even worried where the market is. If it, you know that most of these old pros are basically trading with RSI, relative strength index. It's overbought, it's oversold. That's it. That's it. That's their system. There is nothing else. They look at it. Oh, it's oversold. We'll buy. Oh, it's overbought. We'll sell. You know, and that is the most basic system you can get. Probably the simplest in the world. It's not even price action. It's just, it's oversold, we'll buy. RSI, you know? And you can do that. You can do that. Ben says, Nick Sean believes that. Ruman, Nick Sean helped me. Okay. Oh, that's fantastic. I'm glad to hear that. Shane mentioned him to me, and I did have a look at a couple of his videos, and very much, yeah, I agree. He's also got the nail on the head, similar to us, where we've realized that that you're not going to make money out of lines, guys. You know, you've got to manage the risk and work the trade. So you take the trade and then you just work the trade. That's basis of it. Keep it simple. Why stress about lines? Exactly. Blue Mango says even the trading god like Brooks says every trade the maximum 60% chance. It's, you know, he's probably being complimentary to himself by saying he's got a 60% chance. He's got a 50% chance. Everyone's got a 50% chance. It doesn't matter how long you've been in the markets. It doesn't matter how long you've been trading. It doesn't make you a better trader, number one. And number two, you've got the same chance as everyone else. You know, the only thing that I've got, for example, is the advantage of experience, and sort of like I said, human beings are creatures of habit. So, I've seen that before, because you start picking patterns up in the market, you start seeing things, okay? And so you've got that advantage of, I've seen that before, so I know what's going to happen next. It's a bit like if you're a sportsman or anything you do in life, you know, because you've got experience doing it, you've seen it happen before, so you know what to do, kind of know what to do next. Does that mean it's going to happen like that 100%? Probably not. But at least you have an idea. And you spot things a hell of a lot quicker than somebody who started yesterday. So you have that advantage, that's all. You have that advantage over the next person. To see something that's happening, to see something that's going down, that's going to make a difference to any given trade. And that's what gives you the edge. The edge is not in the system. The edge is not in the lines. The edge has got nothing to do with that. If you just have experience in the markets, that's your edge. Your edge is spotting it. And then your edge is the strategy. And like Blumanga said, even Brooks said, that if you don't have a strategy to go with your system, you've got zero chance of making money. So many people, you know, most traders get into trading, most, not some, most get into trading, and they do not have a strategy. They simply start trading. They simply start clicking the button, buy and sell, with a view to, well, this is a system, this is a squiggly line, it should make me a profit. I'm going to buy it and it's going to make me a profit. And that's how most people get into trading. And that's it. There's no strategy behind it. There's no risk management, no nothing. Just, I'm going to buy this and let's see what happens. That's how it works. But then you learn, you pay school fees, as they call it, you pay school fees. You know, Dr. David Paul, he was from South Africa. Well, he was from England, but he lived in South Africa for a while. He was here for a long time. Probably in the time when I was pretty much young and starting out and whatnot. Very clever man, very clever man. He is the late Dr. David Paul now. He passed away, unfortunately. A little bit older than me, but not much. And it's very unfortunate that he's gone. He was a fantastic, he knew the markets, he knew what he was talking about. Very much a little bit of a mentor to me, because I had a look at a lot of his stuff and his information. And a lot of his stuff I simplified for myself. And his main system was known as the Wyckoff system. It is a little bit complicated. It's not that complicated, but it is a little bit complicated. What I've done is basically simplified it down to support and resistance. But he was actually Tom Hugard's mentor as well. They were friends, and he was a big mentor to that guy. So one of Dr. David Paul's biggest things was take the trade. If you see the trade, take the trade. That was one of his biggest things. I didn't know him personally. I wish I had. But yeah, he definitely knew his stuff. Definitely. He was very clever. And like I say, he actually, I believe, taught Tom how to trade. But then Tom, don't try and emulate Tom. He trades on 5-minute charts. He's got a psychology to die for. I don't think you're going to be able to do what he does, not easily. He just thinks differently to everyone else. Okay, so be careful of that. Be careful of trying to copy guys like that, because a guy like that is genuine. He knows what he's doing. He knows how to trade on those levels. He's one of the 1%. And to try and copy that there's a certain kind of psychology there. And yeah, he doesn't feel fear. And that's the thing. Maybe there is a point when he does, but yeah. That's the trouble. People think because they see somebody else doing it that they can do it. You've got to find your own feet. You've got to find your own way. You've got to find your own comfort zone in this game. Believe me. You can't just say, I want to be like that. I'm going to do that. And then it's not that easy to do what that oak's doing. You've got to find your own feet and your own comfort zone. Oh, Douglas Brian Shannon. Yeah, I know about Mark Douglas as well. I don't know Brian Shannon though. Dr. David Paul did lectures every month in Durban. We traveled down every month, listened to him for years. Yeah, he loved his horses. Yeah. Yeah, everyone is fearful. The point is to control it. But you know, Bruman, you get guys that just they just can do it, and 99% of people can't. One of the reasons I prefer trading on the higher time frame and the 4 hour and things like that is it's much more relaxing on the mind. You've got more time to think. And I like to leave positions in place and leave it and walk away. Because I find that my mind struggles to sit and watch a 5-minute chart and not click a button and get in and out of the trades too early. It's difficult. It's really difficult. And you can think you can do it, but it's really difficult. So it takes a different kind of person to be able to just let a trade run in front of them. And it's not easy. Believe me, it's not easy. I did 5-minute trading for a long time. And I really struggled with my discipline. It's it's the most difficult thing to master, is that discipline when you're watching charts, when things are going into profit or loss or whatever the case, and keeping that discipline. It's difficult. But I like the idea of the higher time. Most people like me have moved or transitioned into higher time frames because it's easier to take a position, leave it, and walk away. So, yeah. Iago Cash, what's up? What's up? How's it, dude? Train needs to see the price move. And I put that down to, let me put it this way. Most people who like to see the price move maybe have a form of impatience. In other words, you don't have the patience to sit in your hands and just let things happen and wait. You want it to happen now, and that becomes quite difficult. That's the difficulty, and that's when it becomes actually difficult to master your emotions as well. But if you can, that's great. But yeah, patience is a big thing, and boredom plays a big part of it as well. The whole reason I got involved in the lower time frames was because I was bored. And then you start, I need things to happen now, and I need things to happen quickly. What also happens as well, besides all of that, is a lot of guys get involved in lower time frames for the purpose of trying to make money quickly as well. And you've got to be careful of that as well. You know, I can't wait a month to make the money. I need to make it today. I need to make it now. So you get involved in the lower time frames because it's quicker trading. So you feel like if you can trade quicker and you can trade faster, you can make money faster. There is a flip side to that, and that is you can lose the money just as fast as you make it on the lower time frames. Patience is a big thing. Yeah, let's not ask Shane's wife. But yeah, it's a bit like ADHD or whatever the case. You need things to happen now and whatnot. And I get it, because I felt that way in the past as well. That's why I traded on those time frames for myself, is because I needed to see something happening. I needed to see it happen now, and I also became a little bit overconfident. I must admit, at that time, where I thought, I can beat these markets easily, and so you start trading on those really low time frames, and then it hands you your butt, and you think, oh, okay, there's a problem. I was one of the fortunate ones to get out of that alive, break even or whatever the case, and not become one of the statistics, but many people do. And another thing I found myself doing is leaving trades in because they hadn't won, and then waking up in the middle of the night to trade them, and oh goodness, it was just, it's become a real mishmash. And then I decided, no, walk away from that. It's impatience, and it's I want it now, and I want to see it happening, and what have you, and that's one. And then you start trading on the higher time frames and position trading, and then it becomes boring, and then you start a YouTube channel. Okay. Let's not go there, shall we? Yes, patience is very hard indeed, and that's probably the most difficult part of it all. So, guys, we've had a winner today. I'm very chuffed with that. I would like him to send me the email so that I can send him what he needs and all the rest of it. But it's been a fun day. I think what I'm going to do, I'm going to call it a day. We've been here for a couple of hours now. I'm going to head on my way and be off. Guys, it's been great having you around again. I need to see immediate wins, gains, or also lower time frames for me. Yeah, that's what it's all about. It's the impatience and wanting to have instant gratification. That's what it's all about. I think a lot of you younger guys will obviously be heavy into the lower time frames. Very much so. But you'll find over time, you'll migrate to the higher time frames. Guys, thanks for watching. It's been fun. It's been great as usual. And I hope to see you guys back on Tuesday again for the 1100 GMT plus 2. I'm actually really considering even moving this one a little bit forward, because we do have a lot more people on the Tuesday. Shane says, don't forget to like, comment, and subscribe. I always forget to ask. Why do I always forget to ask? I'm enjoying watching the channel grow. It's a bit of fun. Guys, keep your feet on the ground. Reach for the sky. And I will catch you on the rebound.